when you see a result and you are going on a bit of a manhunt to figure out a strategy and to dive into it, speak to the agent and see what kind of campaign it was, because a result doesn't tell you that there were 5 people competing.
If we are talking to a client about finding a really good, profitable, dual lock, double story townhouse development site you buy and sell and make money out of in 20, 24 months, you're probably looking around 3.5 mil.
I challenge all the punters, and I know the fish is up there in sunny Sydney. What's the property values when you go 36 kilometres out of the city in Sydney, fish? The people that are predicting interest rate cuts and what Greater Melbourne, Victoria is going to do over the next 3 to 5 years, if they're any way even half right, people that do this can then put themselves in the way of some solid capital growth.
Yeah, that's right. So because of the increase in the cost of construction, which we've spoken about on the podcast a number of times, what we've found, and as we've mentioned, is the property that you need to buy, or the site you need to buy, that cost has increased as well, because your overall project cost has increased.
Hey guys, welcome back to the Development Tank. Pumped for another one today. We've got the guru back in the house. We're talking about strategies and how to get into property development at the lower end. How much money do you need? What sort of serviceability will look like? How much are these developments costing? And how much are we making? So this is something we've been watching for a while. Gav's pretty keen on it. I'm keen on it. And it'll be about people getting in at those lower levels, building a portfolio, building equity into the development, building your own equity and not waiting around for it. So let's get into it. Also, if you're looking to do a knockdown rebuild, dual occupancy or multi-unit development site, please jump in, do a consultation. We'll talk you through the strategies of what we do and how we do it and how we can optimize your financial future through property. Jump across to Instagram, Peter Kelly Official. Come say hello. Lots of cool stuff happening in there. And make sure you jump in the littlefishnetwork.com.au to become a fish. It's free. Thank me later. There's no reason why you shouldn't be a fish. Lots of people in there helping each other on their property journey. So make sure you jump in there. Guru.
Good to be back.
Good to be back. You've been working on some things like always.
Yes.
We're talking about an interesting little one today, I reckon.
Yeah, look, we've seen quite an increase of inquiries over the last few months. People, I think, are sort of coming out of hibernation. They can see that we're heading in the right direction. So you're fielding a lot more calls and talking to a lot more people. But what that is also showing us is there's a broader range of people who are trying to contact us. Yes, we're still doing great projects in your leafy southeast corridor and even north of the city. But there's also then that clientele base that maybe just don't quite have as much to spend, but want to learn and want to get involved in the market. So what we've done is we're looking for a strategy or a type of project where we can provide a service for these people who probably don't have as high a budget.
Yeah, 100%. I couldn't agree more. And these suburbs, we'll probably looking at sort of 2 opportunities today, or 2 examples today, probably down each peninsula, which surrounds Port Phillip Bay, and just show people what we're potentially paying for the land, the product that we're putting on, and the value that we're creating, the equity that we're creating inside that asset, and showing people maybe how much it'll cost to hold into the future. And the bit I love, the people that are predicting interest rate cuts and what Greater Melbourne, Victoria is going to do over the next 3 to 5 years, if they're any way even half right, people that do this can then put themselves in the way of some solid capital growth.
Yeah, that's right. So, because of the increase in the cost of construction, which we've spoken about on the podcast a number of times, what we've found, and as we've mentioned, is the property that you need to buy, or the site you need to buy, that cost has increased as well, because your overall project cost has increased. So with this Readybuild product we're sort of going back to the nuts and bolts, and we're trying to find a product within that sort of, I guess, that approach, and trying to find sites that we're going out of Melbourne a bit, as you say, down on the peninsulas, and more targeting around that sort of 900 to $1 million land purchase price, and then putting a product on it that we can actually find some good equity uplift and some good rental returns. Again, slightly different strategy to what we've been doing here for years and years and years. But there's clients that are interested in that, where they want to build their portfolio, not only just, hey, look, can you find us a development site, and if they go and do their thing
Mm.
and hold it, but they actually want us to develop it, and then they'll hold the 2 assets or the 3 assets.
Yeah, correct. And I think, based on someone looking to buy a development site, but if they can dive into it because it is at a price point that is achievable for them, and we'll break that down today, then at least then once it's finished, they can then rent it out, and that yield is manageable.
Yeah.
That's the thing, to buy a site and have an old rundown home on it, because you might look to develop it one day and you're getting modest rent and only one piece of rent.
Yeah.
To be able to put two assets on it, subdivide it, have 2 properties, have that flexibility to rent them both out, maybe sell one, hold the other, whatever that might be. But to be able to rent them out both at solid rents, obviously times 2, get you to a point where holding these things isn't that big a burden at all.
Yeah, look, the days of positively geared properties is pretty rare, particularly low risk,
Yeah.
positively geared properties. So what we're looking at is a single level dual lock design, so cheaper to build, no stairs, obviously, being
Yeah.
a single level. So
Yeah.
you're, I guess, appealing to maybe a downsizer market. And then also looking in the areas, we're going to have a chat about an area in Geelong, and then down in Mornington in Seaford as well. So
Yeah, perfect.
retirees, close to transport.
Well, it's retirees, but also like, if we're, and we'll probably look at a couple of examples, maybe 3-bed, 4-bed potentially, but these single stories, to do 3-bed or 4-bed, depending on your block size, families can live in those. You know
Yeah,
what
like
I mean?
a
And
family
and
house.
and if we're talking blocks of probably 600 to 800 Gav
Yep.
potentially,
Yep.
you get a backyard, you get a front yard, you got no common property. These things. I feel like people starting a family can live in them and, enjoy them. People that have got, I feel like they're open to a massive part of the market compared to, I feel like the other townhouse with the stairs maybe cut off the downsizer market.
Yeah.
And what I love about these is just the land component as well. Because as we know, what appreciates when
Yeah.
you're looking at having new property, it's the land. So instead of buying a little unit where it might have a postage stamp of land amongst lots of other units, you do a strategy like this, and each block's got maybe 300 to 400 square meters of land.
Yeah.
Like that's the good stuff. That's the stuff they don't make any more of. So that's going to appreciate over time for you.
Yeah, well, the areas we're looking in, we are looking at 700 to 800 square meters if we can find them, and we're still finding them, around that mill mark. So you're right. You're getting a house that a family can live in, and you're getting 400 square meters of land.
That's the bit I love, and especially with the holding strategy, like, because as we know, something, brand new home comes out, the building itself probably depreciates slightly, but the land appreciates over time. So to have a really good land component, I think's a really good strategy from a hold strategy. And I reckon as a purchase price, I reckon down in sunny Geelong, you might even have a bit cheaper.
That's right.
Cheaper
Well,
purchase price than the mill mark, which is pretty nice.
this is your hometown, so to your neck of the woods at least. Anyway,
Yeah.
down in Geelong. So let's go to Land Checker, and we have been looking at a few suburbs in and around Geelong, but one that is a bit of a favourite. And this site, well, as we film this, is on the market, and we're assessing it. And I think an important note to make at this particular point is we're still building this out. So we're getting very, very close to nailing it. But there's still a bit we've got to work through with just our DD process, the numbers, and also working with our builder. I mean, we're still, working on the designs. We're very, very close actually. And we're working on the numbers literally this morning downstairs. We're back and forth and just sort of getting it right, because, these are a lower cost project, so your margins are a little bit shallower, so you just need to make sure that your costs are nailed. So
Yeah.
so in saying that, let's head on to we're looking at Newtown. So it's 79 Buckingham Road in Newtown, and
That's in your river precinct there, Gav. Like, you kick a torpedo to the beautiful Barwon River there. So.
Well, this you could probably speak a little bit more to where we are. I mean, it looks like we're pretty close to the water, and my understanding is it's a pretty popular area.
No, 100%. Newtown's the premier sort of suburb down there in Geelong. And yeah, that river precinct's definitely sort of highly sought after. And yeah, definitely, great sought after primary schools through there. You've got the secondary schools that aren't too far away either, sort of all walking distance there. So yeah, tick for location, 100%. You're never gonna struggle to rent it out.
Yeah.
And especially people wanting to dive in the sort of the primary school zones down there and have, if you're not in a position to buy, you can rent and still obviously send your kids to those primary schools is definitely a big tick. So yeah, location's good for sure.
And one thing I have noticed in looking around Geelong is there are quite a few heritage overlays as well. So just a note if you are looking in these areas, just to make sure you do your due diligence, because you may end up with a property you can't do much with. All right, now let's do a quick zoom in on this. So if I select the information here, we've got 783 square meters. So again, we've sort of looked at 4 or 5 of these in the last sites in this area in the last week. We're probably looking in this spot. So this is just one of a few.
Yeah.
And 783 square meters. I think there might be a little bit of fall on the land, not a huge amount, probably pretty close to flat. If we have a look at the high res.
And I think probably another point as well, Gav, obviously with the new sort of planning and statewide res code changes, I think if you can develop in a way that ticks the boxes and, still meets all these requirements, so you can be sort of fast tracked through the process. As we branch out into these other areas, for me, it gives me a fair bit of confidence to go, well, if we want to run around and do single story dual locks, even double story dual locks for that matter, in municipalities where, we haven't done as much, it gives me confidence that, we can just go into these other areas and sort of rock and roll on these fast tracked planning timelines.
Yeah, it is definitely reducing the risk. And another thing to, I guess, point out is if you're doing a 4-bedroom single level townhouse, the footprint generally is going to be larger than a bigger dual lock.
Yeah.
So we're actually using more of that land in site coverage. And now with these revised res code plans, they go from 50 to 60 or even up to 65 and 70 in some areas. But as a general rule, you're looking at around 60%.
Yeah.
So that going from 50 to 60, and as we're learning, we're probably not even going to be able to use all of that 60, but even to get from 50% coverage to 55 actually makes a huge difference.
Yeah, spot on.
You get a couple of extra rooms into it. You go from a 3-bedder to a 4-bedder single level townhouse. So
yeah, it opens up this strategy, or just stops us sort of throwing too many in the bin.
It's come in at a pretty good time for for what we're trying to achieve for our clients. It's great. Now this particular site, to be fair, the house is probably a little bit too good.
Yep.
So we're probably paying a bit of a premium for that. But we can get the other crossover in this side as well. I'll just quickly touch on this. I don't want to spend too much time on what we're looking at here. But what you'll notice is, if we can get it the right way around, land checker needs to fix that. It does fall away a bit from the street. So again, it's not something I like too much. But again, what we're looking at here is parcel of land, location, and some of the numbers. And if it's going to work, then we go and find the cracker site.
Yep.
So let's duck into the numbers. So here we are in Newtown, 79 Buckingham Road. Now, if you have had a look at the feasibility calculator on the Little Fish network, you'll notice at the top of it, and I'll just flick across here, and this is just a bit of an edit. I've hidden the other bits and pieces on the spreadsheet. It's just to sort of show you at the top of that spreadsheet on the Little Fish network, which is free to use by anyone.
You're mad if you don't get involved, guys. Come on.
Is this calculator where you put your land size in, you've got your coverage there, which is now 60% in most cases, and I've got in here your driveway coverage, which is just your sealed surfaces, and you've got your garden open space. A lot of this stuff automatically populates, but it lets you know if you've got 53% left remaining. So that's how much.
It tells you
coverage.
where am I tapping out?
Correct. Yeah. I mean, look, this is not an exact science, but it's a very, very good guide. And if you're not far off from putting signature on a paper, then of course you're talking your town planner, right?
I think it's a great one that some people go, okay, cool, 60%. And they go, I've got 60%. But then this is a great trigger to remind you that there's other factors that are going to tap you out before your 60% site coverage does. And that's exactly what this does.
Garden open space trumps site coverage.
It's the ace, isn't it?
It is.
It's the +4 card.
That's right. So keep that in mind. The bigger the site, depending on the bracket you fall within, it'll go up to 35% from down at 25% from the very, very small blocks. So in this particular example here, I've got the upper level at 0% because it's just a single level, and it's sort of telling me I can get around 20 squares on it. So I know I've got, if I can get a 4-bed single level, probably 18 to 20 squares. So it's a good little tool to use, and I think that people should use it, and it is free to anybody who wants to jump on the Little Fish network.
Let's go.
Right, now let's have a look at the feasibility here. So I think the asking price is around 800,000.
I think you're right, about 800. But I think, like you mentioned earlier, just a caveat, just watch what sort of houses you're buying as well. Like if you're in a market, and we see this all the time, we just say, hey, that's a house. If you're looking at a reasonably tidy 4-bed house, you're probably paying a little bit too much for it. We want as raw as land as possible.
Well, we're looking at a couple other sites a little further north of this particular site in Geelong, and those sites have got no dwelling on them, and they're 600, 650 from memory.
Yeah, that's right.
The area is not as prime as Newtown, so the resales aren't quite as, the forecast sales aren't quite as good. So it's thereabouts. Again, like, we're just working through the process. We're learning these things, but as you say, if you can find a site that doesn't have a house on it, and there's quite a few in Geelong.
Yeah, as long as you speak to your broker and you get the lending and all that down pat. But yeah, if you're not paying for demo, and you're not paying for a house that you're going to demo,
I mean, that 20 grand odd makes quite a bit of difference when you're talking about feasibilities with a total cost such as this. So we'll work through that. We've got our stamp duty here, our site acquisition fee, planning costs, project management, which we've reduced for these, these sort of, regional or smaller sites, if you like.
Yep.
We're still working on the build, so I'm letting people know that this is a number that we're working towards. But
hopefully we can get it a bit under that cap.
Hopefully we can, and that's actually what we're trying to achieve, to be fair. But a total build around 880,000. I mean, that's
fully turnkey, Gav. We're not talking the old house and then you got to do everything else yourself. You've got your driveways, landscaping, fencing, got contingency in there as well. Which isn't even spent yet. But
look, it's not going to get you a 2-rack finish, but that's not what we're targeting out there.
Nah, correct. No. It's like, solid, well presented, attractive, will rent out well, and great land components that can appreciate.
Yep. So we've got our holding costs in there with residential loans, 20% deposits, and around 6%. That could come down, but I guess that's time will tell. So we sort of got a valuation on finished townhouses. So these will be about 18 to 20 squares, 4-bed, ensuite on the master. And I think there's a little alfresco at the back, I think, from memory. And we're thinking around 1.15 mil as a valuation. So what that does is it increases our equity in the property into this project by 357,000. That's an equity uplift. So that's great, pretty much from day one, which is around 60%.
Solid, really solid.
Yeah, so it's terrific, right? Now, another important little chart here below that, we've just got this here calculates how much cash needs to be put into the project. So if you want to do it in 2 stages, then you probably need sub 300 to buy and hold the land, if that was your strategy. If you're going to buy and build and then rent them out, then you're probably looking at, 585. So let's just say sub 600 grand.
Yeah.
That's a pretty good entry level into a project where you're going to get a good return. So if we flick down a little bit further, what we've got here is a project outcome chart. So this is how much money will be remaining on the property, an interest rate at 6%, which that could potentially drop down by half or more in the next 12 months.
Yep.
Some are forecasting just that. We've got a rental income, forecast rental income. And at the moment, caveat here, we haven't included like land tax and those other fees, like
probably some property maintenance, property management and property maintenance. Yeah. So just your sort of on roads per annum.
But then on the other flip side of that is you've got your depreciation.
You've got your depreciation schedule, which when you talk through with your accountant and you see what you can depreciate on the asset. But yeah, these new properties, you can pick up, I've seen clients pick up $10,000 to $15,000 per unit, depending on how much you're spending. So anyway, there's some further things, as Gav said, asterisks, suss it out with your accountant, that sort of thing, but definitely a good opportunity to make these things neutrally geared.
Yeah, that's right. Those sort of, those two factors have the potential to cancel each other out, but
Mm.
they really are unique to each person, each
Yeah,
investor, how many
correct,
assets you've
correct.
got,
You got to
your
dig
income.
deeper, and that's the thing. And that's what our clients come to us. We're the property developer. We help them identify due diligence, feasibility, get it built, get it subdivided. Definitely help them and share stories and experiences on what we've seen people do. But super important that whether it's your accountant, your broker, that you bunker in with them, and definitely use companies like us as your sounding
Yeah.
board to help you through. But yeah, they're the ones that are going to bring you through, and you just want to surround yourself,
Yeah.
with the right ones.
Well, this information is just, I guess, a starting point,
Hundred
and
percent.
we narrow in on a site, and then quite often for a client, their accountant or broker may request information in a different format or in a different way. I'll update the feasibility. I'll move a few things around to make sure that the information is displayed in a way that they can use it,
Yeah.
and that helps them get their most accurate assessment at their end and make sure that they're good to go.
Yeah, 100%. And that's the thing. So this project, a client may need circa 580, 590, 585. There you go. They
Yep.
need 585, maybe pulled out of an existing asset, refinanced, put into a project like this. They need the serviceability, so they need to have the jobs and maybe a dual income or whatever that looks like to go to the broker and the broker will say, hey, I'll lend you circa 1.35 finance on project. And then if you can build in equity of circa 300,000 on top of your 580, over that probably 18-month, 20-month period, that's good money. But for me, it's that 3 to 5 year sort of
Yeah.
lifespan, or even further on, because you can hold this thing without too many issues. So then once capital growth does its thing over time, which in time it will do its thing,
Yeah.
to put yourself in the way of that with multiple townhouses, I think, and with that really strong land component, I think it's a good one.
And it's a good suburb. It's not like we're 40 kilometers
Well, they're
northwest.
existing suburbs, aren't they? We're
Very
not
close to the
going
beach,
out to
yeah.
the greenfield sites where some of these other mobs dive out, and there's a new subdivision in the western suburbs of Melbourne, and we'll buy you a few in there where they keep building them out, and that supply demand ratio never tips in your favor. Like, these are built up suburbs that they don't build up anymore, and they're river precincts, they're school zones that as time goes on and the population grows in these areas, demand just goes even higher. But you've locked it into one of these areas, like you like they'll keep building way out west.
Yeah.
But in these precincts, there's no more land.
Well, this particular project, an important point to make is the total project cost is sub 2 mil. It's 1.94 mil. Now, if we are talking to a client about finding a really good, profitable dual lock, double story townhouse development site you buy and sell and make money out of in 20, 24 months,
Yeah.
you're probably looking around 3.5 mil.
Yeah, at the bottom.
Yeah.
Yeah.
That's right. So yeah, that's another important point. So it's not just the 500 odd you need cash to get into this project, but the total project value is sub 2 mil, which is just terrific. Really is.
Yeah, I like it, Gav.
All right. So coast to coast, let's duck over to
Shoot over. And also just another sort of little asterisk there, guys. Like, this is early stuff we're working on. Now, that's a site. That's an example site. Will we pursue it with a client? We probably need to do more due diligence.
Yeah.
And by the time this gets released, we might have already bought it. Who knows? But they're rough numbers at this point. The numbers that we work on with our clients, obviously separately and privately, will suit and reflect their own needs, maybe potential interest rates or what they can afford. All these sort of things go into the mixing pot when we're working specifically with a client. But this is just to get you guys heading in the right direction and get your mindsets going, because to find profitable development sites at certain price points takes a bit of expertise, I think. So, and that's what we're trying to teach you guys. So
I can tell you they're hard to find. Now, also, like you say, it is a preliminary feasibility for that particular site. As we dig into it, maybe the resales are up, maybe they're down a bit, but I know that at the moment we're in the ballpark. So it just means we just need to maybe move here, move there, maybe slightly different products, slightly different land. But I know we're close to it. We're really close to it. And look, that might be it once we've sort of really dug into it. So another area we're looking at is down in the Mornington Peninsula in Seaford.
It's only Seaford. So north of Frankston, but south of your of everything else.
Carrum, yep. So we're not far away from, like Edithvale, and that you're buying land for, geez, 1.2 to
You're buying
1.4.
townies for 2 mil, aren't
Oh
you?
yeah, the townies are that. Yeah, the townies are definitely up there. I mean, I do like that. I do really like that pocket. It just hasn't quite taken off for us yet. But yeah, great part of the world down there. I mean, the beaches.
How far are we to the city, Gav?
Mm.
Like compared to, because you got the
Let's go
sort of
central there.
you got the good access via the Peninsula Link and those sorts of arterials now. Like that's 36 Ks.
36
Like
Ks.
I challenge all the punters, and I know the fish is up there in sunny Sydney. What's the property values when you go 36 kilometres out of the city in Sydney, fish? Get in the comments. Go 36 kilometres out. You're still multi-million dollar
It's crazy.
properties. Anyway, so for me, like, you got Bayside, you got the train, you got the water, you got Eastlink cutting straight through there. So accessibility to one of the most livable cities in the world is like that.
Yeah, they're all really big ticks, and like there's a station right there, Central Seaford, and I think I counted it was 2 or 3 stops down here to Frankston where you've got a massive hospital,
Yeah.
which retirees and people of the like, and even families, they really appreciate the proximity to that, particularly getting there by train, and also then you're a direct link straight into the city. Which is fantastic. And as you say, Eastlink is just there. And now Eastlink has got the join between the Western Ring Road that's in construction at the moment.
Yeah, correct.
So that then provides you with access to all of those northern and even western suburbs.
She's all connected up, or soon when it's finished, it'll all be connected up. So yeah, I couldn't agree more. You get on that and you're moving.
So yeah, we've got a couple of sites down here we're looking at. And what I'll do is I'll just flick over here to an example feasibility. And I don't have an exact location on this one yet because we're working on a few things in the background.
But the thing is, Gav, like we say, this is the model and this is what we're seeing. And we haven't gone to all this time because it doesn't work. It's buying the land and you need to find it for that. Your product needs to be that, but spending that, and then your resales will be circa the amount that we're going to talk through. So, and that model needs to be worked and you need to put the work in to find the opportunities, but this is what we're seeing.
Yeah, and the numbers in this feasibility, they're real. I mean, this is from all the work we've done to this point.
Yeah, correct.
It's just narrowing it down. So here we're buying for a little bit more, so we're up around $1 million. That's probably with an average house on it. You find look down there, you'd be lucky to find vacant land. But if you can find a knockdown, then great. You're probably not paying too much for the house.
And that's the thing. I think that's a point as well, isn't it? These areas that we're looking to work in, you don't find vacant land very often because they are built up areas. So it is what it is. The 9 times or probably 29 times out of 30, you're knocking over a house to do your development. That's just the way it is. The idea is just make sure it's not much of a house.
Yeah. So with this feasibility here, all the numbers are going to be probably a little slightly higher, except for the build, because we're still going to build the same product.
Yeah.
I think the market, that's what they're happy with. I mean, all the things we just mentioned with the train and access, the beach potentially is 100 meters away. That all trumps, marble benches.
Yeah, no, 100%. As far as appreciation goes, because even though the idea is, develop a product that fits and hits the market, what will appreciate will be your land.
Yeah.
Your stone bench shops will depreciate, Gav.
That's right. So with this particular site, we've been through all the numbers and a lot of them are comparable. The main difference is we're buying the land for probably another 150, 200 grand.
Yeah. And probably your resales probably dial up a little bit.
Resales,
is that fair to say?
Yeah, comparable.
Or your valuations,
That's right.
dial up a bit.
Now, I'll be honest, I have found it a little more difficult in this spot to make it work, and it does need a bit more work. And whether I go a bit further south, I've been talking to a couple of agents there, and they've actually told me the exact pocket and the exact primary school to be looking around where they feel that the best money is. So that's where I'm working on at the moment. Unfortunately, there's just it's a reasonably sized footprint or pocket of area, but there's just nothing available at the moment. So I've got agents literally knocking on doors for me trying to find someone who's willing to part ways with their house. So because the numbers look a lot better there.
I think another point is though, like Geelong's 70 Ks, sort of CBD, and this is 36. So like I think that's relevant. And the thing is with Geelong, that people that know where the train goes in Geelong, the train sort of cuts right into the CBD, and the good residential pockets, there's no train. They've got a great ring road and they've got great access, but the train is in there. You sort of got to sneak into town, get on the train and sort of head up to Melbourne. So for me, look, when you're looking at that area there being a bit subjective, I've got a little bit of bias, but being subjective, to be 36 Ks from the CBD, probably closer to the actual Port Phillip Bay here, but actually have train. Even though, the percentages do look a bit different and these numbers probably need to be dialed, but the percentages do look a little bit different. As far as capital growth goes, I'd back this horse, Gav, to be
Yeah, I think
honest.
so. Yeah, I
Yeah.
mean, you're 5 minutes from Frankston, which is a huge activity centre, the hospital, and all the services that go with that. And
Mm.
they're literally at your doorstep as well. And then the city's probably 40 minutes drive.
Oh, well, that's the thing. Like if you're 36 Ks from Melbourne, for me, that's Melbourne.
Yeah.
Geelong 70 Ks, that's Geelong, not Melbourne. So not to poo-poo Geelong, but compared to this opportunity or these types of opportunities, I think the capital growth play with the infrastructure around a bad boy like this, I'm just a bit more keener on, Gav.
I think, look, apart from being so close to the beach, a very important factor here is you can get on a train and the next time you get off, you walk to the MCG and you go on the footy.
Well, damn, since you go to the footy, go watch the Mighty Roos, Gav, hey?
Yes, please. So in this particular example here, look, we're looking at probably around 650 cash requirement. If I just go back a step, we've got a valuation in there. This particular area here, we're probably looking at an ROE or equity uplift of around 38% or 250 grand. So again, pretty good, no problem. But just seeing if we can get something a little bit better, a little bit higher, and as low risk as possible. And they're the key factors.
100%. Because I think with this strategy as well, Gav, obviously the ones that we develop to sell straight away, got to dial the numbers in, that this thing's going to realize in 2 years. So it's all very bit more accurate. But these ones, I think, for me, having that foresight to be like, hey, this is a suburb that's got great infrastructure, great uplift, great potential uplift. Like we just mentioned earlier, for me, it's that 3 to 5 years, hold on to it, get yourself in the way of some capital growth. Like those 1-2s in 5 years, you just could be 1-4s, 1-4-5s, like without a drama in the world with those massive land components. So for me, yes, even though a bit less than Geelong on face value, numbers still need to be worked. They're not finalised. I'll probably end up a little bit closer. But for me, the capital growth there for over 5 years, potentially this outruns another one.
Yeah.
So anyway, I think just that, I guess, how bullish we are and you guys are when you're doing this on an area, I think you just need to put into consideration proximity to Melbourne, train, roads, schools, hospitals.
Those things are never going to change. And I think there is a strong demand there that's not going to change either, because there wasn't a lot of comps, because it's a great concept and a great idea. But there were just a couple that have been recently done, and I called the agent, I drilled him. You know, how'd you go? How many people at the auction? What was the process?
Yeah, so
like?
looking underneath the resale number.
What type of buyers did you have? How many buyers did you have? And he's like, look, mate, I had 5 people competing for it.
Yeah.
It was really popular.
Yeah.
He said, yes, there were a few retirees or downsizers in the mix.
Yeah.
And he said they just loved. I said, what do they like about it? He said, well, they just loved the fact that it was so close to the beach, close to the train, close to the hospital.
Yeah.
And also then just the activity centres, and of course, he said the close proximity to the RSL.
And the RSL, happy days. And that's the thing, and that's what this product is, that single story, minimal thresholds throughout the house for people, as they're aging potentially. But a great lesson there, Gavin, well pointed out, when you see a result and you are going on a bit of a manhunt to figure out a strategy and to dive into it, speak to the agent and see what kind of campaign it was, because a result doesn't tell you that there were 5 people competing.
No.
In this market, 5 people competing is gold.
I was just going to say.
So to understand that, and that's the thing. So, and in these suburbs, I challenge anyone to go find a 3-4 bed, single level, brand new for sale at any one time.
Close to an RSL.
Close to an RSL. So this product isn't developed that often because people usually chasing yield from a putting multiple townhouses on the site, which I don't think is always the play. But anyway, I think this strategy and this type of product will always not have a great deal of competition when you hit the market from a rental, and if you do look to sell at some point from a sales point of view.
Absolutely. So look, we'll just quickly close this out. So at the bottom of the chart here, we've got our project outcome similar to the other with your holding strategy. You've got your outstanding costs, outstanding sort of, I guess, your loan, the interest on that. We've got a couple of rental incomes there. Bottom line is we're sort of close to breaking even again. this saying it's a bit positive. Again,
Mm.
once you've nutted out all the little numbers for the costs and then for your depreciation. But at this particular point in time, we're just a little bit better than break even. So
Yeah.
not too bad.
So that's the thing. So like we say, you got your deposit, you get your lending through your serviceability, and then you look at, okay, how much this thing's going to cost me to hold. The fact that you got strong rental income, you're turning one into two, you got good equity uplift, so you got more equity than you started with, so you've built on that, and you're close to neutrally geared. Sounds right to me.
Yeah, flexibility as well.
Yeah, flexibility. A year or two goes by and you go, hey, you know what? We want to upgrade the family home. Let's offload one of the townies and maybe keep one.
Yeah.
But I just love the idea of strong land component, potential future gains on that land, not a big burden to hold. It's a good one, Gav.
Yeah, I think it's a bit of an old school approach to property development, I think, and one that I've always had in the back of my mind, where you develop to create more assets and then you sell one or two or however many, but you try and keep one. I mean, that's the goal, I think, is to get to a point where you can do a development and hold one or hold two, depending on the scale of it, of course.
Yeah.
And that's your asset base. That's your retirement. That's your passive income down the track.
I couldn't agree more. And the thing is, and like we said, we individualize these sort of scenarios for clients depending on what they want to see. But if someone's strategy might be to do exactly this, but sell one, if it's, God willing, a reasonable market, sell one, pay down that debt, then you are positive. Like I tell you now, I'm looking at the numbers now. Like you pay down here, we're looking at 1.2s, Geelong will closer to 1.1s. You pay down that amount off your loan, and then you look at your rental income on the remaining lending, we're positive. We're making money.
That's right.
So anyway, that's a good one, Gav. And that's a ripper. We've hit up two different sides of the peninsula. You can do this anywhere, but it's all about looking at land, build, and then valuation. We want to create equity, want to create uplift there, but then it's what's it going to cost me to hold.
Yeah, look, there's a lot of work being done. There's quite a bit more to be done yet. So either get out yourself and give it a good hard crack, or give us a call and we'll help you do it.
Bang. Love it, Gav. That's a good one. We'll see you in a couple of weeks, mate. Well done.
Great. See you soon.
There'll probably be a couple that we've purchased maybe in that time, and we'll be able to actually run the final feasos and the final, strategy.
Yeah.
Once a few of these are secured.
I'm hoping so.
Love it. Nice one, Gav. We'll see you in a couple of weeks.
Great. Thanks.
All right, guys, anyone that's going to get value out of that, please like, share, subscribe, and share that with them. If you think it's up their alley, share it with them. And if you're looking to do a knockdown rebuild, dual occupancy, or multi-development unit site, please book a consultation, jump across to Instagram, come say hello, become a fish in the Little Fish Network. Like Gav said, the feasibility calculator's in there. You can get in there, start playing for free. Thank me later. Happy developing.